Well, take a look at this. That's bank stocks. That is a surge in bank stock values just since election day. Dick Bove is with us now. He's the bank analyst with Rafferty Capital Markets and a welcome guest on the program. Now, okay, I presume that the bank stock surge is because Donald Trump is going to do away with some banking regulations. But look to the future. How much further have these stocks got to go? How much bank regulation is going to be swept aside?
Well, I think that they have an enormous amount further to go, okay? I think that, just to give you some gee whiz numbers, you know, it was estimated in the Financial Times this morning that regulatory costs were about $200 billion just to put the stuff in place and to report to the government. Litigation costs were somewhere around 170 to another $200 billion. So over the last 5 years, you know, the banks have spent $400 billion on litigation, penalties, fines, you know, regulatory costs. If that's about $80 billion a year. If you bring that number down to about 10–20% of the total, you know, that's only going to be $10–15 billion. The savings there is staggering. But that's not where the big savings are going to come from. The big savings are going to come from is if the Fed is redone. In other words, if we get rid of these board members and put board members in that are oriented toward capitalism and business, then you're going to be able to change minor things like the risk-weighted adjustment or the, you know, liquidity coverage ratio or the, you know, supplementary leverage ratio. If you do that, you're talking about hundreds of billions of dollars in profits. So the opportunity here is really substantial.
I have to get this clear now. In the interest of full disclosure, do you own any of these big-name bank stocks that we're putting up on the screen?
Oh, I own a lot of them.
Okay, that's what I was looking for. An honest man, you're all right. Now, to you, you get into the minutiae of these little changes in regulation and changes at the Fed. But to a lot of people, more political people like myself, I'm interested in a change of the relationship between government and banks. At the moment, we've got a punitive relationship. We want to punish them and run them out of business. If we change that, that's the change that I'm looking for. Are we going to get it?
No, you're exactly right, and I do think we will get it, because I know all the focus is on, you know, what Mr. Trump is going to do on the Supreme Court. But think about the Federal Reserve. There are supposed to be 7 members. There's only 5. So he can immediately put 2 members on. Ms. Yellen is, I think, got to leave by February 2018, so he's got a 3rd one there. And Mr. Fisher has to leave by June of 2018. So now he's got 4 of the 7. And if he can move Mr. Tarullo out, who I think is a socialist and anti-American, if he moves him out, then basically he's got 5 of the 7 people on the Fed. Once you put 5 of the 7 people on the Fed, you don't have to worry about getting rid of Dodd-Frank. You shouldn't waste your time doing that. You have to change all these little rules, and every rule that you change does exactly what you want to. It gives you a relationship between government and the industry, which is positive, pro-growth, capitalist, which is what we haven't seen for 8 years.
Dick Bove, you're the only analyst who appears on Varney & Company. And you know why? Because you tell it how you see it, direct and to the point, and everybody knows what you're talking about. You're all right, Bove. I don't care what they say. I think you are all right. Dick, thanks very much indeed. Sir.